Today I'm back on the chart showing you another smart money strategy, and the strategy that I basically the methods that I use to approach the market on an everyday basis. Now when I'm trading on Forex, guys, the first thing I like to do is I like to identify my market structure, right? So that is basically the trend, whether the market's bearish going down or whether the market's bullish going up. Okay? So here, before I made this trade, market was going down because I had lower highs and lower lows, as you can clearly see in places like here, 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 and here. Okay, so those were my lower highs, lower lows, and once I saw my lower highs and lower lows, what did I do? Okay, so price didn't exactly come all the way up to here like I planned, which was originally I was going to take the trade up in this region. So instead, what happened? Well, if we zoom in on price and go over here, and we zoom in on price action previously above here, we notice that what did the market do? The market came up here, it went up, down, up, made higher highs, lower lows, then it went all the way straight up, right? So the market was going back up to that point, and I was thinking it was going to go up, and I was going to take a sell trade up to that fair value gap and balance gap supply zone up here. So instead of doing that, price just tapped into a little bit up here, and then it went straight down. So it came up here a little bit, and then it went straight down. And when it went straight down, what did it do? It broke that first piece of structure here. Okay, so we had a BOS, we had a break of structure right there, and what happened after that break of structure was what? We had a little supply zone or order block that it tapped into right there, and then it came down and broke structure again. And what did it do? Let's take the blue marker out again. Okay, so what did it do? It broke structure again right here, and when it broke structure, it left another gap vulnerable. Okay, so to me, I saw, okay, so the market's definitely bearish. We have a bunch of vulnerable price action here. We have a bunch of supply zones. So here where the gray boxes are the supply zones. I missed the first one up there, so I thought I would take the second one, which was yesterday. And this trade actually lasted overnight and sped up during the morning. So here, we look. This gray box here was my original entry, but then I wanted to enter early in case, because when price leaves these giant gaps, sometimes I'll enter early. And so basically I entered at this black line here, and then the stop loss was supposed to be this red line, in which it was, and price came into my entry. And another confirmation that my entry was correct was whenever I see price come into my entry points that I'm looking to trade, I only want to see either a I want to see a gap. And what I mean, not a gap, a wick. And what I mean by wick is, you see how price just tapped into my entry and then immediately went down and kept going down and then tapping again. Instead of a bunch of candles coming into my entry, the market came in and tapped with a wick. So when you're trading smart money, you want to make sure your entries look exactly like that and have those wicks going into your entry rather than the candlesticks. Okay? Because smart money tends to do that. They tend to tap and go. So yeah, guys, that's pretty much all I did. So the first step is identify your market structure, and then once you identify your market structure, you identify whether the market's bearish or bullish by identifying your current highs and current lows. Then you want to identify the current price range, which you already kind of did because market structure is your current range. And so, but what I mean is, choose the market structure that's most current. And once you've done that, you want to then look for POIs. And that just simply means point of interest. POI stands for point of interest. So you want to look for your POIs, and those points of interest are what? They're areas that you're interested in taking trades in. And so those areas can be what we trade. So if we're trading smart money, the areas that we're looking to trade that we're interested in taking are things like fair value gaps, order blocks, supply and demand zones. Those are all smart money entries. So those are our points of interest. So that gray box you see above here where I took my entry, this is actually considered a lot of things. This is considered a fair value gap and an order block because of it being an order block and having a fair value gap or a gap. And so In my group, that's pretty much all we trade, guys. We only trade fair value gaps, slash imbalance gaps, and order blocks. Those are the only two setups that we take, and we find plenty of trades. The moment we add all these other things in the Fibonacci and complicate it is when things become hard. That's all we do. So we identify our market structure using our time frames. Then we look for POIs, points of interest, which are your what? I'm gonna write it again. So in our group we trade order blocks and imbalance slash FVG fair value gaps. So that's your second step. Your third step is to, once you've done that, I've done it already, but you don't see it. Set an alert when price gets to your entry, okay, your POI. So that that black line you see and the gray line would be my POI. You see above this text box where I entered there. So set alert a little bit before your entry. So don't set the alert right at your entry. Set it a little bit before. You don't see it because I didn't have it there. But I originally had a line like right about there before my actual entry. So set alert a little before your entry on TradingView. And if you don't have it, you should be able to set at least 1 to 2 alerts for free. And if not, buy TradingView Pro, and you can get as many alerts as you want. Okay, so it's only like $12 a month. So set a little before you set alert a little before your entry on TradingView. Once you see your POI. Once you see POI. Okay. Next step is enter. Enter trade with risk management. So enter with risk management, meaning get out your trading tools. So once you see your entry, the first thing you want to do is decipher where your stop loss is going to be and where your entry and take profit is. So enter with risk. I'll just say enter with R&R. No, I'll just say risk management. Risk management. So that is your SL, TP, entry, etc. And then the next step after that is enter. Okay. So step number 1, identify your market structure. Step number 2, look for points of interest that we trade, such as order blocks, imbalance gaps, and fair value gaps. Step number 3, set an alert before your entry on TradingView once you see POI. Okay. And step number 4 is enter with risk management. Your stop loss, your TP entry, decide where those are based on your. So if you choose that gray box before you added the lines, and you just use that to mark where you're planning on entering. Once you do that, then look for where you would have your stop loss and where you would actually exactly enter. Okay, and then so the step 5 is enter after you do that. Okay, so this is just some beginner tips to help you guys on your trading journey for beginner Forex traders or beginner traders that want to get into smart money concepts, or smart money traders that just want to find a simple strategy and a simple approach. This is a piece of my approach. If you want to go and talk to me more and connect with me more, you can on Instagram. I do have a group, guys. It costs about it doesn't cost a couple $100. It costs $1,000. It's literally $49 to get into my group, guys. It's $49. That's all you have to pay, and then you're getting access to my full actual strategy. I have resources such as ebooks that I use that have pictures, visual pictures of the trade setups that we trade in our group. I don't do any signals or anything like that. I show my weekly trade setups, so all the trades I take, you can see and compare your setups with mine. There's a like-minded community that can help you there. You can get access to me. And the cool, fun thing about it, guys, is that there's actually a chart gallery there, so you can see all the different types of setups that we take, and then just look at that literally every single day, and then post your profits and blah, blah, blah. And this is all for only $49.99 a month. Most people charge at least $100 or $250, $300. But yeah, guys, if you're interested in that, let me know. If you don't have it, if you don't have the money to do that, and if you don't want to do that, it's actually really cheap, so I don't know why you wouldn't. But if you don't, you can start off with my ebook. It's only $19. I have an ebook bundle that's currently on sale, and it basically just shows you pictures and it shows you all the stuff, all the trades that you get, and that we trade, and it also shows you more in depth of smart money and how smart money works, and it just explains it in like a chapter to chapter type of thing. So if you're interested in that, let me know. Put it, it's in the description, in the comments, or you can go on my Instagram. But yeah, guys, I hope this video helped you, and have a good week. It's Friday. This was pretty much, this is the trade I took today. And yeah, guys, and another thing is smart money is really exact. So when you're trading smart money, people don't believe that we can have stop losses that are small, and people don't believe that we can have take profits, but we can, guys, because we can have all these things, because when we trade smart money only trades at specific areas. And so in the Forex market, smart money, the people who are behind the market, those are the banks and institutions. They're the ones that control the markets and are called smart money. Retailers are just us. So yeah, guys, I hope this video helped. Peace.